yesterday's class, did you get a chance to have a look at it, Hardik?
Some of the parts, sir.
Let me just quickly take you through what we did yesterday. And yesterday, the topic for yesterday was basically cost of capital. And we had basically first started with this very simple balance sheet. So what we were showing here is that the long-term funds which a company has, stable fund, comes from equity and it comes from borrowing. There are two components. So if you want to know what the capital structure of a company is, the best way to do it is you have a look at the balance sheet and you look at these two headings, capital and long-term borrowing. Then you get an idea about what has happened. And these, of course, are the other parts of the balance sheet. But for our purpose, these are not very relevant today. So we now come to the capital structure part. And the basic point which you made here was that there are two components of capital structure. One is equity, one is debt. Equity is naturally contributed by the promoters and everybody who becomes a shareholder in the company. And the other component, of course, is debt. But debt is much safer because there is a commitment on the part of the company to repay the money. Whereas in the case of equity, whether you get a dividend, whether you get an appreciation in the share price, capital gain, all that ultimately depends on the performance of the company. But since you are a small owner of the company to the extent of your shares, therefore, it is not very, it's reasonable to expect that you have to take the risk along with the promoters of the company. Basic point we are making here is, which is relevant for cost of capital, is that since the equity is riskier, the equity holders generally want a higher return. And we assume that the higher return would be about 20% generally. Now, today, I will show you the results of a survey which took place in India about a few months back, in which they have actually looked at what is the actual cost of equity of different companies. They have asked almost 197 companies, what is your cost of equity? And from there, you will see that it is actually lower than this. It is somewhere around 15%. But for the sake of convenience, we have taken 20. And after that, we actually showed you some, we looked at some of these balance sheets. So this is a balance sheet of NTPC. As you can see, equities, liabilities. This figure here, 9696, this is the equity share capital. Reserves and surplus, 1,09,288. These are all in crores. Reserves and surplus, Hardik, if you remember, is basically the accumulated profits of the company, which have been retained within the company. They have not been paid out. So ever since NTPC was in business, they earned profit every year. And a part of this profit was retained within the company for investment within the company. And that amount has grown to 1,09,288 crores. So the total equity of the company or the total shareholders' funds is 1,18,985 crores. As against this, they have borrowed 1,51,229 crores. So this NTPC, as you know, this is the thermal power corporation. So there are heavy investments. Capital equipment is a huge cost here. Therefore, they need to invest more. Therefore, they have also, apart from the huge amount of capital, they have also borrowed. If you look at Tata Motors in the automotive business, also a business which requires a lot of what shall I say, capital, because you have to set up that whole assembly line, the whole production unit for manufacturing cars, and that is a serious expense. So here also you will see that whereas the shareholders' funds are 19,000, they have had to take 16,000 as debt. So this is the capital structure of these two companies. And then we looked at the capital structures of two other companies, which are very well known, one Infosys and one TCS. So these are the reverse. These are software companies, consultancy companies, basically, for whom the amount of investment is very low. Their main investment is in human assets. And therefore, if you look in these companies, you find that the total shareholder funds are 71,000 crores and the long-term borrowings are zero. They have not had any reason to take loans. Same thing in TCS, long-term funds almost 75,000 crores, long-term borrowing zero. So for them, the capital structure is totally equity. This was one. Then we looked at different ways of capital, how we calculate the cost. These are very simple calculations. Company A, company B. So you'll have to go through this in detail in when I send you these slides. This is for Hardik. Lokesh was there yesterday. So he would have, he has followed these very closely. And for him, it's very familiar ground. When you do this, Hardik, just note that the capital structure of company A and company B are opposite. Whereas company A has a lot of equity, 67%, and very little debt, company B has lots of debt and very little equity. So you note that, and because of that, you will see that the returns or the cost of capital actually comes down in the case of the company which has more debt. So that is one. Then we looked at the tax implications of debt. So when you take debt, you take a loan, you pay interest. So the interest is not taxed. Interest is deducted. After the interest is deducted, you arrive at the profit figure, and only then do you actually tax. So those who actually take more debt, they are able to pay less taxes and get a higher return. That was, many of these slides are about that. Then we spoke about the fact, a little about opportunity cost, which you understand, which we've explained in previous slides. And we spoke about different projects and how different projects at different levels of risk require. So this project A has a low level of risk. Project C has the highest level of risk. Because of that, the returns expected from project C are the highest. It is because the risk taken by the investor is the highest. So that was one. And then we looked at other simple examples, which this you can have a look at in the slide itself, not a problem. Why do we take cost of capital becomes very important for calculating the or let's say, why is it useful for us? Because it helps us to evaluate the quality of investment decisions which are taken by the management. So whether the decision they took, whether the returns they got from the investment was higher than the cost of capital, whether the capital structure that they decided on was good for the company. And you are able to do a complete performance appraisal of the management based on cost of capital alone. And then this is a more detailed working, these two slides here, on the tax implications of how tax helps to reduce the cost of debt. It's a very simple calculation. You have a look at this. And then we looked at two basic models of understanding how to understand the cost of equity. In this, we began with a preference share which is irredeemable. Irredeemable means for the life of the company, this share will be there. So somebody who actually buys this share, he will continue to get dividends as long as the company exists. So it is called dividend in perpetuity. So in that particular case, if you know the amount of dividend that is going to be paid to you, it is possible to calculate the rate if there is a fixed dividend concept. So that was given here by expected dividend divided by the price of the share, and you get your return. This is the return you are getting. Then we looked at two different models for the calculation of cost of equity capital. So cost of debt is easy. Whenever you go to a bank, you take a loan, they tell you this is the exact rate of interest that we will be taking. But in the case of equity, it is a little more, let's say it's a tougher way of calculating. And here we looked at something called the dividend growth model. And this basically, this is KE here represents the cost of capital. And we said that if we know what the dividend expected at the end of suppose you are buying the share today, and you will have to think what is going to be the dividend the company will give you in March 23. And let's say you are buying the share the share at a particular market price. So this figure is already known to you. Expected growth in dividends, you have to make some assumption कि क्या कितना ग्रोथ होगा इसमें. कंपनी वाले भी बताते रहते हैं कि कितना ग्रोथ होगा या नहीं होगा. तो एक इलस्ट्रेशन के रूप में आप ऐसे देख सकते हैं कि अगर आप एक शेयर को 90 रुपए में खरीदते हैं और 4.5 रुपया डिविडेंड और 8% ग्रोथ होगा, तो उस केस में कॉस्ट ऑफ इक्विटी क्या होगा कंपनी को? ये 4.5 को हम डिवाइड करेंगे 90 से प्लस 8% और हमको वी गेट 13%. सो this is a very simple calculation. In this calculation, obviously, there are certain assumptions. One assumption is that the market price of the share is based on the expected dividends. Number two, the dividend grows at a constant rate. ये assumptions real life में हो सकता है कि नहीं भी possible हो, but what it helps us is it gives us some idea of how to calculate. And then we looked at a more another model of calculation, which we call the capital asset pricing model. And that particular model is again something which I'll just very shortly revise out here. So in the case of the capital asset pricing model, what happens is that you also consider how stable the revenues of the company are. Is it moving with the market, or is it, let's say the NSE or the BSE is moving in a particular way, the growth of the NSE over many years, let's say is 15%. What is the growth of the company? Is it also growing at 15%? Is it growing at lower than 15%? Is it growing at higher than 15%? If we know those things, then it is possible to calculate the return in a better way, or to relate the return by using this information, how the company actually is performing. And that concept, the relationship between the return of the company and the return of the market, that is normally referred to as beta. And then here I had given a very detailed worksheet showing you how to calculate the beta. So remember, market, when we say market of all shares in the market, it is represented by the companies which make up the BSE index or the NSE index. BSE में 30 कंपनीज हैं, NSE में 50. तो जब हम मार्केट की बात करते हैं, उसका मतलब हुआ कि ये 30 स्टॉक्स में क्या उतार चढ़ाव आ रहे हैं, इसको हम कहेंगे कि मार्केट में यही उतार चढ़ाव मार्केट में भी आ रहा है. या आप इसको ले लें या इसको ले लें, दे विल मूव इन द सेम डायरेक्शन. और if this is the market, on the basis of this, it is possible for us to calculate the variation between the market growth and the growth of the shares of the share prices of the company. हार्दिक, इसको ना थोड़ा सा आपको देखना पड़ेगा, आप एक बार देख लीजिए इसको, और if you find that it is difficult to understand, we will explain it to you again and on some other day. But actually a lot of time was spent on this yesterday, so go through the PPT which I sent to you, and also look at the link on YouTube. You should get an idea about how this is working actually. This should be okay. And so all this was discussed yesterday, and you will get a fairly good idea about how the return is calculated. So okay, this is okay. And then, so Lokesh, from this point on, we will be, I think I have to switch the fan on. Sorry. Lokesh, are you with us?
Yes, sir.
So from this point, that is the end of revision. We will be starting today's, the new ground from today. So basically, when we talk about CAPM, you see, in this survey which was held, they asked the companies, do you use CAPM? Because in the foreign countries, this capital asset pricing model is used quite a lot. So in India, 30% of the companies, or let's say near about 40% of the companies, said that yes, we use CAPM to understand the cost of equity. Now, if you compare these two, DDM and the CAPM, you will find that the DDM has very limited application because it is not considering so many things. And the biggest problem is that it assumes that dividend will grow at a constant rate forever. So in our example, when we said that dividend is going to grow at 8%, that means 8% all throughout. Every year, no matter even if COVID comes, the dividend will continue to grow at 8%. It also assumes that the growth rate of dividend is less than the cost of equity. This is the mathematical thing. If this doesn't happen, then that equation will not work. And this means that it cannot be applied to companies that do not pay dividends. Today, we'll be discussing a lot about dividends. So which companies do not pay dividends and why they do not pay dividends, we can actually look at that. In comparison, CAPM is based on better assumptions. The only condition is that the company has to be listed on the stock exchange so that you are able to calculate. And all variables in the CAPM formula are market determined. So one of the things which we spoke about in CAPM was beta. Beta is basically a comparison of, like we just said, the growth rates of the market as a whole and the company. How closely are they related? The other thing is that the risk-free rate. Now, normally in India, the 10-year bond deal is considered to be the risk-free rate. So here, this is the survey I was talking about. So this is the cost of capital survey led by Naveen Bora, partner and national leader valuations, modeling and economics, EY and Ernst & Young, and Tirthankar Patnaik, chief economist of the NSE. So they conducted this survey, and they got data from 197 respondents. 197 लोगों को इन्होंने पूछा ये सब के बारे में. And what did they find? That the average cost of capital is currently estimated to be around 14%. Cost of capital is estimated to be around 14%, which is 100 basis point का मतलब हुआ 1%. 1% since 2017. तो 2021 में cost of equity average companies का क्या है इंडिया में? It is 14%. और 2017 में ये कितना था? It was around 15%. Other thing was, so cost of capital for Indian companies has been declining in line with the falling bonds and policy rate. जितने rates हैं अभी इंडिया में, जो भी anybody asking borrowing money, whether it is the government, whether it is anybody else, the banks, everyone is asking lower interest. Because of that, the basic cost for the company has also gone down. Now, over 1/3 of the respondents, matlab out of 197, you can say that around maybe 60, 65 respondents expected their cost of equity to be in the range of 12 to 15%. और 25% का कहना था कि हमारा जो है वो 15 to 20% के रेंज में होगा कॉस्ट ऑफ इक्विटी. ये वाला 14% इज कॉस्ट ऑफ कैपिटल, मैंने डेट इक्विटी दोनों, और यहाँ पर है ओनली कॉस्ट ऑफ इक्विटी. So when we were assuming 20%, if you look, compare it with this, I would say that we were assuming slightly high. 15 से 20%, 25% का कहना है, और 12 से 15% के रेंज में 1/3 of the respondents, they feel कि we will have a cost of equity in this particular area. Risk-free rate क्या था? So the 10-year bond yield, generally considered the risk-free rate of return, has declined from 6.7% to 6.2% between 2017 to March 21. तो ये भी कम हो गया है. तो अगर रिस्क-फ्री रेट मतलब हम 2017 में 6.7 था, तो आज के दिन में वो 6.2 है. दैट मीन्स कि अगर गवर्नमेंट कोई बॉन्ड निकालती है, आज के दिन में गवर्नमेंट अगर कोई बॉन्ड इशू करती है, तो उस बॉन्ड का इंटरेस्ट रेट कितना होता है? 6.2%. दैट्स द थिंग टू रिमेंबर. एंड जो पॉलिसी रेट है, द बैंक रेट, दैट हैज आल्सो गॉन, रेपो रेट सॉरी, हैज आल्सो गॉन डाउन बाय अबाउट 2%, and this has resulted in reducing the average cost of equity by about 100 basis points. Decline in equity cost has been less than the decline in the cost of debt. इसका कारण ये है कि because banks continue to be very cautious, and because in recent times, I think mainly because of COVID and other challenges which companies are facing, the cost of doing business or the risks in business have gone up. And since the risks in business have gone up, those people who are lending money to the companies, they tend to charge more. That is why the cost of debt has not gone down in the same proportion as the cost of equity. Another finding was that most respondents use the bank lending rate with some adjustments as the benchmark for cost of capital. मतलब बैंक से जो लोन अगर वो लेते, तो बैंक कितना इंटरेस्ट लेती? Suppose the bank was charging 12%, so they feel that this is the rate at which we should have our cost of capital. This is, ये एक मतलब क्या कहा जाए? This is a not something based on theory or something. This is the feeling of the finance professionals of these companies. Now, another interesting table which I found in the article was, and there is a more detailed version of this table on the next slide, but look at this one. Suppose we look at the cost of equity in some of the sectors. For a startup, the cost of equity is coming to around 17.77%. High risk because of the new, इसमें सबसे ज़्यादा है startups, which is what we were also discussing. If whenever a startup comes, whenever you want to do some new business, you are going to have a higher cost of equity. Now, in the case of real estate, it is also pretty high, 16.55. Why is this happening? See, आप देखते होंगे जहां भी बिल्डर्स हैं और उनका प्रोजेक्ट्स है, वो अपने सारे फ्लैट्स बेच नहीं पाए हैं. You agreed with this, Hardik? Agree?
Yes, sir.
In any project you go to, you will find that there are a number of flats which are unsold. लोकेश, क्या हाल है वहां का, आंध्रा का? वहां का भी यही होना चाहिए. See, in any building project,
Yes.
where I think you will find a number of flats which are still ready for, they're available for sale. So
Yes.
builders are not able to sell everything that they construct. Now,
Yes,
because of
sir.
that, their capital gets tied up in these projects. And when a new project comes up, the bank or anybody, any debt which they are getting, anybody who's lending to them, those people are very conscious that these people will not be able to sell so fast. So our money will be tied up for a very long time. So they tend to charge a higher rate of interest. So that is one of the reasons why the cost of equity for these people is going up. Where is the cost of equity low? In the trading businesses, FMCG and chemicals. Yeah, fast moving consumer goods, uh, paste, hair oils, shaving creams, इस तरह की चीजें जो हैं, जो all of us use, ये वाले में you find that the business models are very stable. Companies are also very big, because of which you find you have Marico Industries, you have Procter and Gamble, बड़ी बड़ी कंपनीज हैं, इनका कॉस्ट बहुत कम, इसमें डेट भी बहुत कम इन कंपनीज का. That is, I'm giving that to you as an additional input. So वो एक है. Now इसमें you can see that the full chart here. This is taken from Business Line, June 22nd, 2021. So startups 17.8, real estate का 16.6, healthcare 14.1, renewable energy वगैरह 14.1, retail 13.8, mobiles 13.7, utilities 13.7, 13 ये information technology or associated industries, that is 13.6. Chemicals, as you can see, is the lowest, 11.3, FMCG 12.6, media 12.5. So this will gives you an idea about the cost of capital across these different sectors in the Indian economy. Okay. Now that we've done this, we will now start with the topic for today, which is dividend distribution policy. So one of the things now which we discuss in this dividend distribution policy is, does the dividend paid by a company have an impact on the value of the company? See, normally, अगर आपको value निकालना होता है company का, तो one simple method of taking out the value will be, you look at the total number of shares that the company has, and then you look at the market price of those shares. अगर आप total number of shares को market price से multiply कर देंगे, तो you will end up with the value of the company. Now the question is, if the company pays dividends, does this increase the value? Does this decrease the value? What should be the policy of the CEO? Remember, when we began our discussions on company strategy, one of the things that we said was that companies have to basically aim at wealth maximization. This was one of the things that we spoke about. Companies, basically, all the companies that we have are for profit companies. वो गेम में क्यों हैं? तो प्रॉफिट कमाना चाहते हैं. और वेल्थ मैक्सिमाइजेशन एक बहुत बड़ी क्या कहा जाए, उन लोगों के लिए एक मोटिवेशन है. नाउ डिविडेंड अगर वो पे करते हैं, तो उससे इन द एंड is wealth maximized or is it not? So with that in mind, we have this point, this discussion here. So what is dividend? It is the cash payout made by a company from its profits. Profit से ही आप dividend देते हैं. This is one thing to remember. Now, it can only be paid from profit. The proportion of the profit that's to be distributed is to be decided by the management of the company. Now, इसमें हम 20% दें, 30% दें, 40% दें. This is something which the management will have to decide. Now, यहाँ पर एक question ये उठता है कि is it relevant for understanding the value of the company? Is dividend relevant? अगर हम dividend नहीं देते, तो क्या फिर भी हमारा share price same रहता? अगर कोई कंपनी ज्यादा डिविडेंड देती है तो क्या उसका शेयर प्राइस ज्यादा बढ़ जाता है? तो देयर वाज वन थियरी by a very famous set of economists. They say that dividend is not relevant. Why is it not relevant? They say because investors have the option of selling some of their shares in the market to generate cash if they need funds. Market behavior shows that dividend payouts minimally affect share price. This is one theory. Now, as we will look at this, there are many other angles to this. It is not as simple as this. मतलब ये आप, this is I just giving this to you as a input कि ऐसा भी एक theory है, but it is not so simple. There are many other things which will get into the picture. So, dividend paid. Look at this angle also. अगर dividend का payment होता है, so it is income for the shareholders. And who are the biggest shareholders of the company? Basically, the owners or the promoters of the company. जिन्होंने company की शुरुआत की, they are the people who are the largest owners. So अगर dividend का payment होगा, तो the biggest chunk of the dividend is going to go to these people, जो promoters उसके हैं. That is one thing to remember. Most companies view dividend policy as an integral part of their corporate strategy. And the management has to decide the dividend amount, timing, and various other factors that influence dividend payments. This is a preliminary thing. Just keep this in mind. Now, look at the other implications of this. So, dividend decisions involve balancing the shareholders' desire for dividends and the need for growth. How Lokesh और हार्दिक, ये जो सेंटेंस है कि डिविडेंड डिसीजंस इन्वॉल्व बैलेंसिंग द शेयर होल्डर्स, एक तरफ है कि हमें डिविडेंड मिले तो अभी हाथ में पैसा आ जाएगा, ये फायदा हो सकता है डिविडेंड से, और दूसरी तरफ है कि मेरा शेयर प्राइस भी बढ़े और कंपनी की भी ग्रोथ हो और हमारा एक आने वाले दिनों में जो है हमारा शेयर का कीमत ज्यादा हो. ये दो है हमारे पास. अब इसमें एक बैलेंस लाना जरूरी है. यू कांट हैव बोथ. पॉइंट बीइंग मेड हियर इज इट पॉसिबल टू हैव बोथ? सो इन थियरी द ऑब्जेक्टिव ऑफ डिविडेंड पॉलिसी शुड बी टू मैक्सिमाइज द शेयर होल्डर्स रिटर्न सो दैट द वैल्यू ऑफ हिज इन्वेस्टमेंट इज मैक्सिमाइज्ड. सपोज करो आप एक शेयर खरीदते हो और लेट्स से कि यू आर नॉट बाइंग इट एज अ स्पेकुलेशन कि आज खरीदा, महीने दिन में बढ़ गया दाम, उसको बेच दिए, या दाम बहुत कम हो गया और हम घबरा के बेच दिए. दो में से या तो लॉस हुआ या प्रॉफिट हुआ. नॉट दैट टाइप. यू आर अ सीरियस इन्वेस्टर, यू आर डूइंग दिस एज अ सीरियस इन्वेस्टर. नाउ इन दैट पर्टिकुलर केस जो डिविडेंड पॉलिसी जो कंपनी की होगी, you expect that the company should have such a policy that आपका जो इन्वेस्टमेंट है उस कंपनी, that should be maximized. Maximized investment का मीनिंग क्या होता है कि dividend plus capital gain should be the highest. तो कंपनी को डिविडेंड उसी हिसाब से देना चाहिए जिसमें कि आपका वैल्यू मैक्सिमम हो. दैट मीन्स आपका कैपिटल गेन्स भी अच्छा हो और आपको कुछ करंट इनकम भी मिलता रहे. दिस इज आई थिंक व्हाट एन इन्वेस्टर वुड लाइक. आप अगर किसी कंपनी में इन्वेस्ट करेंगे हार्दिक, तो यही आप चाहेंगे ना कि डिविडेंड भी आपको मिले और आगे चल के कैपिटल गेन भी.
यस सर.
नाउ शेयर होल्डर्स को ये दो चीज चाहिए. नाउ इसमें डिविडेंड पॉलिसी जो होता है ये दोनों चीज को इफेक्ट करता है. हम ये नहीं कह रहे हैं कि अच्छा या बुरा, लेकिन इट इज गोइंग टू हैव एन इफेक्ट. सी, ग्रोथ जो होता है कंपनी का, इट डिपेंड्स ऑन पंपिंग इन मोर कैपिटल इनटू द कंपनी. आपका लेट्स से आपके आज के दिन में 1000 करोड़ रुपए लगे हुए, आप लेट्स से कि 100 करोड़ रुपए कमाते हैं पूरे साल में. दिस 100 crores which you have earned, if you reinvest in the company, it can be used to increase the business. कंपनी की ग्रोथ अगर चाहिए तो कुछ तो हमें रिटेन करना पड़ेगा. देयरफॉर रिटर्न ऑन इक्विटी जो हमारा है, दिस इज डिपेंडेंट ऑन द रिटेंशन रेशियो. नाउ इसमें लेट अस लुक एट द implications of a low payout policy. कम डिविडेंड हम देते हैं, एंड द रिवर्स, हाई पे आउट. अब लो पे आउट का देखो क्या हो सकता है. लो पे आउट पॉलिसी में प्रोड्यूस अ हायर शेयर प्राइस बिकॉज इट एक्सेलरेट्स अर्निंग्स ग्रोथ. दिस इज वन थॉट कि अगर लो पे आउट होता है, कम डिविडेंड हम देते हैं, तो कंपनी के पास रिटेंशन ज्यादा है, कंपनी उस पैसे को लेके एक्सपेंशन ज्यादा कर पाएगी, बिजनेस अपना बढ़ा पाएगी, और आने वाले दिनों में हमारा जो अर्निंग्स है, जो प्रॉफिट, अर्निंग्स का मतलब प्रॉफिट, हमारा प्रॉफिट बढ़ेगा. सो दिस कैन बी वन बेनिफिट ऑफ हैविंग अ लो पे आउट पॉलिसी. अगर हम आज कम पैसे लेते हैं, भविष्य में ये कहा जाए कि हमारा भविष्य सुनहरा है अगर आज हम कम पैसे ले रहे हैं. नाउ ऐसी कंपनियां जो कि फोकस करती हैं ऑन टुमारो, on growing the company, they will be referred to as growth companies. So investors of growth companies will realize their growth mostly through capital gains resulting from appreciation in share value, because वो तो लो पे आउट पॉलिसी फॉर अडॉप्ट करेगी कोई भी ग्रोथ कंपनी. they are not going to give you big dividends. So how will you get some good return? You will get it in the form of increase in share price. Because as the company expands its business, as the company begins to actually increase its sales, increase its profits, it will gradually help to increase the share price also. And in the process, as the share price increases, it will be a capital gain for you. दूसरा साइड क्या है? Flip side मतलब the bad side of the low payout policy is that कैपिटल गेन्स जो मिलेगा ये भविष्य में मिलेगा, आज नहीं मिलेगा. टुडे द कंपनी विल इन्वेस्ट दैट मनी. इन्वेस्ट करने के बाद जो है वो कुछ पेड़ लगने वाली बात है, फल आने में तो टाइम लगेगा थोड़ा ना. इट विल टेक सम टाइम फॉर द ट्री टू गिव अस फ्रूट्स. राइट नाउ व्हाट इज हैपनिंग इज यू आर सोइंग सीड्स. सो द फ्रूट दैट यू विल गेट विल बी इन द फ्यूचर. तो यू हैव टू हैव पेशेंस. दूसरा एक डाउट आपके मन में हमेशा है, एंड जितने लोग इस एरिया में एनालाइज किए हैं उनके मन में भी, कि अगर ये हाई ग्रोथ सिस्टम हम लेके चलते हैं, इट मे नॉट नेसेसरीली रिजल्ट इन द हाई प्राइस ऑफ शेयर्स. हो सकता है कि इन सब काम करने के बाद भी शेयर प्राइस उस हद तक नहीं बढ़े जिस हद तक हम उम्मीद करके चले. सो एक सोचने वाली चीज आपको यहां बता रहे हैं. नाउ so it is difficult to identify the effect of payout on price. ये problem है. All throughout this discussion, you are going to find this difficulty is coming again and again. Now look at this. This is a screenshot from a book on this area. What he is doing is, he is giving you two companies here. One is a high payout company, ये ऊपर वाला, लाइन के ऊपर वाला, और एक है लो पे आउट कंपनी, वो नीचे वाला है. ये इक्विटी शेयर का वैल्यू है, दिस वन. यू कैन थिंक ऑफ दिस एज द मार्केट प्राइस ऑफ द इक्विटी शेयर. ये प्रॉफिट कमाती है कंपनी. तो इक्विटी है 100, प्रॉफिट कमा ली 10, सॉरी 20%. ये 20% को हम फिक्स्ड मान रहे हैं ऑल थ्रू आउट. और डिविडेंड इस पे ये वाली कंपनी ऊपर वाली जो है ये 80% डिविडेंड देती है. मतलब 20 रुपए हुआ तो ये 16 रुपए ये दे देती है अपने शेयर होल्डर को एज डिविडेंड्स. 4 रुपीज इज रिटेन्ड अर्निंग्स. यही हिसाब है ना. हमारे पास 20 रुपए थे, 16 दे दिया अपने शेयर होल्डर को, 4 रुपए बच गए, उसको लगा दिए कंपनी. नाउ सेकेंड ईयर में ये 4 रुपए नेचुरली ऐड हो गया, रिजर्व एंड सरप्लस. 100 रुपए इक्विटी, रिजर्व एंड सरप्लस 4, टोटल शेयर होल्डर्स फंड्स हो गए 104. नाउ This is gives you again return of 20. It is giving you, इसको अगर आप 20% करेंगे कितना आएगा? 20.80. इसका 80% 16.64 और रिटेन हम कर लिए 4.16. 5वां साल आते आते मेरा जो शेयर होल्डर्स फंड है, इट हैज इंक्रीज टू 116.98. My earnings have increased to 28.47. डिविडेंड हो गया 22.77. रिटेन अर्निंग्स हो गए 5.69. 20 years के बाद this has reached 210.68. हमारा अर्निंग्स हो गया 42.14. डिविडेंड्स 33.71. रिटेन अर्निंग्स 8.43 उस साल. Now look at the low payout. So low payout wala, it began with 100. It made the same profit, 20, but it gave only 20% as dividend. ये वाली company had given 80%. These people, they retain 80%. 20% shareholder को दे देता है, low, very low payout का. And consistently ये 20% ही अपने shareholders को देते रहता है. So you see, in the 5th year, they have grown their shareholder fund because of retaining the profits has grown to 181.07. इसके 5th year में कितना था? 116.
16.
This has grown to 181. Profit has grown to 36. Dividend has grown to 7. इसके 15th year में भी 7 नहीं. And then retained earnings has gone to 28.97. 10th year में they are 380. इसका शेयर होल्डर फंड 380 हो गया है. Look at them in the 10th year, 142. हाँ, इसका रिजर्व एंड सरप्लस इस कंपनी का तो बन नहीं पा रहा है, नहीं तो सब पैसे बाहर दे रहा है. This company, because it is focusing on that, this is increasing. Earnings at 20% has now gone up. इसका, see, the capital base has gone up. Expansion ज्यादा हो रहा है, sales ज्यादा हो रहा है, profits भी ज्यादा कमाने लगा. 76. इस तरह का प्रॉफिट तो ये कंपनी कभी कमा ही नहीं पाई. और डिविडेंड अब ये 15 रुपीज इसका हो गया बाय द 10th year. रिटेंशन इज 60. 15th year में इट हैज गॉन अप टू 798. ये कंपाउंडिंग का इम्पैक्ट. कोई भी चीज को आप जमा करोगे, आफ्टर अ सर्टेन पीरियड ऑफ टाइम उसका ग्रोथ का स्पीड बहुत फास्ट हो जाता है. इट इज कॉल्ड द पावर ऑफ कंपाउंडिंग. So it has now reached 798 shareholders fund. इसका कितना था? 173. So this company now has 6 times more capital than this one. Shareholders funds इतना ज्यादा हो गया. Its earnings are now 159. और इसका dividend is 31, which is again now higher than the dividend this fellow is getting. ये इसको तो 27 ही मिला, इसको 31 मिलता है. और रिटेंशन 127. अभी भी रिटेंशन इसका ज्यादा होते जा रहा है. 20th year आते आते इसका 1677 हो गया शेयर होल्डर्स फंड्स. 335 हो गया प्रॉफिट्स. और डिविडेंड इज नाउ 67. इसका डिविडेंड 33 है. रिटेन अर्निंग्स 268. सी व्हाट दिस टेल्स यू इज, 2 चीज इससे पता लगता है कि इफ आई फॉलो अ पॉलिसी ऑफ retaining my earnings, then over a long period of time, I will give more value to my investor than a company which is following a high payout policy and paying high dividends to the investor every year. So, isme there are once again many assumptions are being made. One of the assumptions which is made is that there is always an opportunity for the company to invest these retained earnings in profitable opportunities. वो है उनके पास, तभी वो कर पा रही है. ओके, इसका एक और दृश्य आप ऐसे देख सकते हैं. लुक एट दिस. ये वाला हाई डिविडेंड, दिस, ये जो बॉक्सेस हैं, और ये आपका लो डिविडेंड वाला है. आई थिंक डिविडेंड पर शेयर अंडर हाई एंड लो. So जो लो डिविडेंड वाला है, आई थिंक ना ये गलत लिखा हुआ, बिकॉज ये 4 से स्टार्ट हो रहा है इसका डिविडेंड। 4 रुपए डिविडेंड तो लो डिविडेंड था ना, सो दैट मीन्स दिस
हाँ
इज द
सर।
लो डिविडेंड। ये लो डिविडेंड कंपनी है। एज यू कैन सी, ये ग्रेजुअली इसका डिविडेंड भी ज्यादा होने लगता है, और it surpasses this as far as dividends are concerned. So over a period of time, it is able to give even higher dividends than the company which was started off with high dividends. ये एक और वे है उसी चीज को समझने का। ये उल्टा हो गया है this, so please remember that.
Okay.
Okay, sir.
Now let us just continue with this discussion. हाई पे आउट पॉलिसी अगर हम रखते हैं, तो इट मीन्स मोर करंट डिविडेंड्स, लेस रिटेन्ड अर्निंग्स, और इससे क्या होगा? आई हैव स्लोअर ग्रोथ एंड मे बी हमारा मार्केट प्राइस पर शेयर जो है वो कम होने लगे। मे बी it's possible that because my growth is slowing down, because remember, people who buy shares, they are looking at the future. So if you are not investing in your future by increasing your capital base, then maybe the demand for your share will not be so good. So dividends are, this is something which Lokesh can help us with. Dividends are current earnings and can be taxed at a rate higher than capital gains. इसका क्या position है अभी लोकेश? You are in the tax game.
Sir, for dividends, they are included in the normal income, sir. They are taxed as per the slab of for an individual. So in case of capital gains, there are special rate of taxation, sir. For short-term capital gains, it is 15% straight away, and for long-term capital gains, it is 10% with 1 lakh rupees up to exemption of 1 lakh rupees gains, sir. I mean, in excess of.
Then in that case, this statement will not apply in India. Apparently, in the foreign countries, capital gains tend to be. No, but what you are saying is also the same, no?
Yes, sir. Same, sir. This statement is correct, sir.
This statement is correct. Yes.
Yes.
So dividends are current earnings and can be taxed at a rate higher than capital gains. So that is another reason not to give dividends. This is from the tax perspective.
Yes, sir.
It's a difficult decision for the company because your shareholders want. See, it is not just the shareholders. It is the promoters also. See, the people who started the company, they are not always going to be thinking in terms of long-term growth. They also want money. They want some incentive for doing all this. So they want dividends. So it is a difficult decision for them. If an investment is to be made from the profits by retaining profits at the cost of giving dividends, the dilemma is which to prefer. हमारे पास में 2 options हैं कि I give dividend or I invest the dividend, grow the company. It is a genuine dilemma. They have to think about this, which is better. अगर ये dividend दे देती है, see, think of it this way. Company has a chance to, it has some market opportunity has come. It is in a position to, let's say, go for expansion. पैसे उसको चाहिए, लेकिन there is a lot of pressure कि भाई आप dividend दे दो. Now, if it gives dividends and still it wants to expand, the only option for it will be to either raise fresh equity, go for a public offer of shares, फिर से आप पैसे जमा करो पब्लिक से, और नहीं तो you borrow. तो दोनों ही केस में the chances are that it will be costlier. ये तो आपको अपने प्रॉफिट से ही मिल जा रहा था. So in many respects, this was something which was much more in your control. So there is a trade-off between retained earnings and issuing new shares. Lokesh, ये trade-off फिर आ गया.
Yes,
So
sir.
here again, it is a sacrifice.
Sacrifice.
So, do I want to sacrifice retained earnings and go for investment, or am I going to think of issuing new shares and not retaining earnings? So both options are there for me. Now we look at one model which is called Walter's model of dividend relevance. ये भी interesting है. ये सब लंबे कोई one of the first models है इसमें.
So the trade-off sentence we can give example, no, sir. I mean, in Infosys gives less dividend and retained earnings are more. But in case of Vedanta, I think everyone knows. Vedanta pays high dividend, but frequently asks for FPOs and IPOs.
Achha, there you are. Excellent, excellent. So, let me show that to you. So I got some data on about 6 companies today on how much dividend they are giving and what is their position. Let me get that sheet, I'll show it to you. Okay, here is the slide. Let me show it to you. Here it is. So what I was doing was I looked at these companies. Each of these companies is more than 70 years old.
Yes, sir.
Britannia, Century Textiles, Asian Paints, Tata Motors, Marico Industries, and Apollo Tyres. Now, if you look at this, equity share capital, 24 crores for Britannia. Shareholders funds, total shareholders funds is 2,402 crores, 2,402 crores. Long-term borrowings are 698 crores. Debt equity ratio is 0.29. Face value of share is 1. And the dividend payout ratio is 100%. So they don't retain capital at all. They're not retaining. You look at Century, this is the reverse. They have a retention ratio of 100%, and they are not giving. This is also because of loss. So in this particular case, and in the case of Tata Motors, it is mainly because of loss. So in these cases, what you find is retention ratio is 100, Tata is 100, Apollo Tyres is also 100. Asian Paints is, see, this is the midpoint, 55, 45. So 55% is being given as payout, 45 is being retained in the company. And of course, Asian Paints, you should know, is one of the best, one of the super companies as far as growth is concerned. Marico Industries, 87 and 30. Marico Industries is Parachute Oil and all,
Yes, sir.
that company. So dividend payout is 87%. This is for 22 and 2022, and the retention ratio is 30% only. So what you can see is that different companies are adopting different policies. So probably it will be better to look at this Britannia here as an example, Asian Paints and Marico. These two companies, Century, Tata, Century, I don't remember clearly, but Tata was in loss, and I think Century was also in loss in this year. That is why, the retention ratio is, I should not be saying 100, it's 0 basically, both sides. But you look at Britannia, this is in the FMCG business. They are paying huge amounts of dividend. Whatever they earn, it is going as dividend. And if you look at the percentage, the number of, like a 1 rupee share, it is possible that the dividend per share is going to be almost like 50 rupees, 60 rupees. It is that high. So different companies have different ways of actually looking at this. So anyway, let's continue with the discussion, because Lokesh brought up that question. So I thought, let me just show you this. Now, this particular Walters model is based on any model in finance. For the model to work, there have to be some assumptions. They cannot base it on real life. So they will make some basic assumptions which will give you an idea. So it will not be 100% accurate, but it will give you a basic idea. So one of the concepts here is that for expansion, this company is going to rely on retained earnings. So only internal financing. So retained earnings is a form of internal financing. The other big assumption is that return is going to be constant. The cost of capital will also be constant. The third one is, the model will work, but you have to assume 100% payout or 100% retention. Only then. It's a mathematical model. We don't have to look at that side. The dividend is paid at a constant rate. So the model postulates that the dividend decision of the firm will be different for growth firms, normal firms, and declining firms. I think this particular part, what he has said here, never mind the mathematical part, this is actually something which we can consider to understand how dividend decisions are made. So let's look at the growth firms. So in the growth firm, so remember we had done the internal rate of return. So any project, what is the actual rate of return of that project? We have calculated that by projecting the earnings over the life of the project, then discounting the earnings to their present values. And then we had looked at, we had totaled them all up. And we said that the internal rate of return is that point where the investment which was made and the sum total of all these returns, if you deduct that, it will be equal to 0. So in this model, growth firms are internal rate of return is more than the cost of capital. So quite often we are discounting the present values there using the cost of capital. So he's saying here, what will be the case? You will always get a positive NPV. If you do the NPV calculation for a growth firm, the NPV calculation will be positive, number one. Now, these firms should reinvest their earnings. So the point is, if you are a growth firm, if you have an internal rate of return which is more than your cost of capital, you're doing well. You have these various opportunities to invest money. Then in that case, you should reinvest your earning 100%. Don't give money away. Reinvest it. So if they retain all earnings, they will maximize the value of shares and the value of the firm. Basically, what will happen is your shareholder will know. It will be very much like the table which I had shown you, where we saw low payout. So instead of low payout, imagine the same table with zero payout. So what you will see is, over a period of time, there will be huge growth. The total amount of shareholders' funds will go up because the reserves and surplus will go up. And at the same time, with so much more money at their disposal, the business will be able to do much better. Its profits will go up. And in the long run, it will create huge value or huge wealth for the investor. That is the logic in retaining all the profits in the case of growth firms. Now you take the case of a normal firm. Normal firm is some firm where they don't have so many opportunities for expansion. But basically, the internal rate of return which the project is giving them is equal to the opportunity cost or the cost of capital, whatever you take. Basically, they are not going to make a huge return. That is not going to happen. Now, they don't have unlimited opportunities for expansion. If the firm retains the fund and invests it, it will not be able to increase wealth, as the return will be just equal to the cost of capital. Because whatever they will earn, that amount is going to go into basically the costs itself. They are not going to make some huge profits. If they do not invest, they will in any case not earn. So for such firms, the dividend decision is neutral. Look at it in another way. If they pay the whole dividend to the investor can then take that money and put it in a different company which has a better rate of return. So the investor will be able to earn more. So that is one reason to give dividend to the investor. So you can think of it like that also. But as far as the growth of this company is concerned, it is not going to be very good because it does not have opportunities for investment. So this company, whether it invests, if it is going to invest, it will be at the same old rate. So they aren't going to make too much money here. If they don't invest, they are still as good as they are today. So that is one way of thinking of it. Now, the last category is declining firms. Now, in the case of a declining firm, they don't have potential profitable opportunities to invest at all. That is not there. So their return on investment is less than the minimum rate required by investors. This is the problem with this type of firm. And investors of such firms would like to have the earnings distributed to them so that they can spend it or invest somewhere else. This makes sense. So basically, for the management of the firm, one way of deciding whether to pay dividend or not is based on whether they are a growth firm, in which case they have lots of opportunities, so they should not pay dividend, retain earnings. Whether they are a normal firm, in which case they can decide this way or that way, but in any of the two cases, according to the model, the value of the company will not increase. And the third one, where they do not have opportunities, so there is no point at all in retaining earnings. See, if you don't have opportunities and you lock up capital, it is going to be a losing proposition. Now, while these things are useful for us, there are some limitations here in the model. So first of all, it assumes that there are no opportunities for external financing through debt or equity. Remember, one of the first assumptions in this model was that any expansion that will happen in this company is going to happen through internal finance. But it is possible for a company to actually get some funds from outside if it has a decent business model. So if such a situation exists where there is no opportunity for getting equity or no opportunity for borrowing also, that means the company is in trouble. कोई इसको पैसा देना नहीं चाहता है. अगर ये हालत हो गई है कंपनी की, फिर उसका बिजनेस मॉडल क्वेश्चनेबल हो गया है. So if the company is capable of generating normal returns, there will always be a possibility to raise funds. ये एक weakness है in this particular model. But like I said in the beginning, all models in finance, they will always have some assumptions. The strength of the assumptions is that it allows you to, go ahead with your calculations, look at, the data of a large number of firms, and then you are able to come out with some, conclusions. Like, for example, in this case, the concept of the growth firm, the normal firm, and the declining firm, which are useful. So that's one point. Now, there is one more concept here, which is, this is a very interesting concept: informational content of dividends. So, look at the first statement I'm making. Dividends are relevant because they have informational value. So, किसके लिए information? This information is for the investor. So somebody who is analyzing the company, let's say somebody who has invested in the company, when he gets a dividend or does not get a dividend, this particular, this information which he gets, this has a certain value for him. So a company can make statements about its expected earnings growth to inform shareholders in order to create a good impression on them. See, there is a company, and let's say there is the CEO, sits on an interview, and the person there, the anchor of the TV show, asks, "Sir, आपकी कंपनी कितनी ग्रो करेगी आने वाले दिनों में? कैसा रहेगा आपका परफॉर्मेंस?" And he says कि भाई हमारी ग्रोथ बहुत अच्छी होने वाली है. I am going to do very well. सुनने वाला क्या समझेगा? If you just listen to this, probably you will think कि हाँ भाई ये कहना तो इसका काम है. He should be saying this, because he is the CEO of the company. So even though he is saying it, maybe you will not be so convinced. Now, ये कहता है ये चीज, और इसके कुछ ही दिन बाद, let's say you get a dividend. Company gives you a dividend. Now suddenly you will begin to believe कि लगता है कि यार वो ठीक कह रहा. Maybe he was right. So he is saying that there will be growth in the company. So they appear to be quite comfortable. They have given me a dividend. So the value of the information which you are getting by getting the dividend is also a type of information. How good is the company? The company is giving dividend. इसका एक informational value है. तो informational value का क्या point हुआ कि because of the information which you have got, you are able to take a decision about the health of the company. So, ये वाले concept में, a change in dividend policy is associated with a. So, अगर आप take this first statement first, कि dividend shows that the company is financially strong and profitable. First thing, let's say you are not a very knowledgeable fellow. You are just a normal investor. You are not doing a balance sheet analysis or a complete analysis of the functioning of the company. So you say that dividend company दे रही है, हालचाल ठीक है. It's making profits, only then is it giving dividends. So it appears to be profitable and financially strong. Now the dividend policy changes. If it changes, what is the assumption? If there is a change in today's profitability and maybe future earnings also. As an investor, you can only guess now, from the behavior of the performance of the company, the behavior of the company, you can arrive at certain conclusions. So if there is a change in the policy of dividend, you can say that you can assume that maybe this means that there is a change in profitability. So an increase in dividend can therefore have a good effect on share prices and vice versa. Dividend पिछले साल जितनी मिली थी उससे ज्यादा डिविडेंड इस साल हमें मिल जाती है, इसके चलते क्या हो सकता है, डिमांड शेयर का बढ़ सकता है. अगर डिमांड बढ़ जाएगा तो उसकी शेयर प्राइस भी डेफिनेटली विल इंक्रीज. नाउ गोइंग अहेड विद दिस, ये जो हम इस वे में सिग्नल्स दे रहे हैं इन्वेस्टर थ्रू गिविंग डिविडेंड, we are giving a certain signal to the investor about the health of our company, and that's why this is called dividend signaling. So in finance, there is this concept of signaling theory. So this is signaling theory applied to dividends. Now look at this signal here. Suppose a company is following a policy of paying a dividend of rupees 2 per share against earning of rupees 4 per share. So generally, let's say इस कंपनी की अर्निंग्स होती है rupees 4 per share, उसमें से 50% वो डिविडेंड दे देते हैं. ये चला आ रहा है कई सालों से, दिस इज हैपनिंग. और कंपनी की अर्निंग बढ़ के 7 rupees पर शेयर हो जाती है. डिविडेंड ये 2 रुपये ही देती है. इट डजंट चेंज द डिविडेंड. It is following this constant dividend policy. It says कि नहीं हम 2 रुपये ही दें. Now, if it does this, the assumption क्या हो सकता है आपका? आप ये सोचेंगे कि अच्छा ये डिविडेंड तो बढ़ाया नहीं, वो लगता है इस साल कुछ साइक्लिकल होगा थोड़ा, for some reason the company has done well. लॉन्ग टर्म में तो this company will continue to वही 4 रुपये ही कमाएगा ही. 7 इस बार हो गया, 2 रुपये हम लोग को दे दिया, यही बहुत है. Or because of that feeling, maybe investors they will not want to increase their shares in the company. They'll not want to, or new investors may not come and demand the shares because they might feel that this is a one-time thing. Cyclical है, अभी business cycle इनके favor में हो गया, तो therefore this happened. Now think of the other thing. 7 rupees per share हो गया, डिविडेंड ये बढ़ा के 4 कर देता है. What will be the signal here? Lokesh? Suppose I take the case like this, कि company decides to pay a dividend of rupees 4. इसमें तो क्या था, 7 rupees per share का earning,
2 rupees per share पे रहे.
Now they are going to pay 4 against 7. So as an investor, what will you think? क्या लगेगा आपको?
Sir, as their earnings are increasing, they are contributing to shareholders also increasing. Sir. See,
and what
they are
will
contributing more than 50%.
Okay. And so based on that, what will be your thought for the future earnings of the company? थोड़ा positive होगा?
Yes, sir, थोड़ा positive ही होगा, because they are constantly paying extra dividend, sir, without retaining whole amount.
Yes. So what the signal will be, the assumption is that the management is expecting a long-term increase in earnings, and because of this assumption, it is possible that the demand for the shares will increase. So the point we are making here is dividend sends a signal. Dividend sends a signal, and if it helps to create a demand for the shares of the company and the market price goes up, ultimately it increases the firm value. On the other hand, if it sends the wrong signal, it will end up decreasing the market price and decreasing the firm value. This is the basic point which we are trying to make out here. Continuing with that, take another case. If it is the practice of the company to pay 50% dividends, which they have increased only when in the past, what I'm saying is कि ये 50% दिया करता है. Sometimes they have increased it. But when have they increased it? When their earnings have increased to new levels. then an increase in dividend will convey the signal that the company is going to perform better in the days ahead, and this will increase its share price. So the history of the company is it normally will pay 50% dividends, but it will increase this when its shares, when it's, the business level or the profit level actually increases. So in such a case, if the company is paying a higher dividend, the automatic assumption or conclusion made by the investors will be that इसका business का level अब बढ़ गया है, ये अब अच्छा काम करेगा, इसको profitable opportunities है, and we should buy these shares, as a result of which the market price can increase. If the policy is to give a higher dividend with every cyclical change in earnings, then an increase in the dividend will not lead to the market being influenced favorably. So अगर ये policy है कि जब कभी भी इसको ज्यादा मिलेगा ये ज्यादा दे देगा, और फिर जब साइकिल उसके अगेंस्ट हो जाएगा, it will also lower the dividend. इस टाइप के कंपनीज के केस में the information value of the signal is reverse. बिकॉज अगर आप ज्यादा डिविडेंड दे भी देंगे तो वो कहेंगे अरे यार इस साल इसका साइकिल इसके फेवर में था, बिजनेस साइकिल, इसलिए दे हैव गिवन अस अ हायर डिविडेंड, बट दिस इज नॉट अ गारंटी दैट इन द डेज टू कम दे विल कंटिन्यू टू गिव अस हायर डिविडेंड. दिस इज द बेसिक लॉजिक इन दिस सिग्नलिंग थियरी. Now we coming to the next section of this. So we looked at some of the theories. We look at dividend distribution policies. So in dividend distribution policies, we are looking at three types: stable dividend policy, constant dividend policy, which are very similar, and a residual dividend policy. So in a stable dividend policy, the goal of the policy is a steady and predictable dividend payout each year, which is what most investors see. इसका theory ये है कि our investors would want a steady payout, every year. हर साल उनको चाहिए. They are not so interested in growth, and obviously this is going to be this is an assumption which is being made by the management. Whether earnings are up or down, investors will receive a dividend. इनको मिलेगा. We will try to keep it stable. The goal is to align the dividend policy with the long-term growth of the company rather than quarterly earnings volatility. This approach gives the shareholder more certainty concerning the amount and timing of dividend. तो इसमें बहुत ज़्यादा fluctuation नहीं होने वाला है आपकी dividend. This is the basic point. कौन सी कंपनी ऐसा कर सकती है? We'll think about that in a little while. So the danger of the policy is that if it is changed, it will affect the attitude of the investors towards the company. If a company with a pattern of stable dividends misses a payment, the impact is going to be much greater than a company which had an unstable policy to begin with. कुछ कंपनीज हैं जो कि बहुत स्टेबिलिटी मेंटेन कर रही हैं अपने डिविडेंड्स में, एंड सडनली एक साल ऐसा आता है जबकि वो नहीं देती है डिविडेंड्स. In that case, it is going to create a problem, because then people will get with that information signaling which we spoke about. ये negative signal एक हो जाएगा for the company. This is the big problem for this. Now, the next part here is we look at something very similar, constant dividend policy. The primary drawback of the stable dividend policy is that investors may not see a dividend increase in boom years. So boom हुआ, ज़्यादा profit was cyclical है, it increased, profit increased, but I am giving you still a lower level. So under the constant dividend policy, a company pays a percentage of its earnings as dividends every year. In this way, investors experience the full volatility of the company earnings. मतलब जब ज़्यादा है तो हम ज़्यादा देंगे, जब कम है तो हम कम देंगे. A constant percentage fix कर लिए, and I will do that. So if earnings are up, investors will get a larger dividend. If earnings are down, investors may not receive a dividend. ये constant वाले में है. The primary drawback to the method is the volatility of the earnings and dividends. मतलब ये ऊपर नीचे बहुत हो. If anybody is relying on these dividends, it will be a problem for him, because every time the company doesn't do so well, it will be giving less dividends. So it is difficult to plan financially when dividend income is highly volatile. ये एक है. And then we come to that policy, which is actually the practical one, which most companies do, which is called the residual dividend policy. Now, in a residual dividend policy, this can also be volatile. Basic point is, पहले कंपनी का जितना तरह का रिक्वायरमेंट्स है, इट विल मीट दैट. जो कैपिटल एक्सपेंडिचर्स उसको चाहिए, जो वर्किंग कैपिटल के लिए चाहिए, any other requirement which the company has, first it will, from the profits, it will take care of these things. Once it has taken care of these things, only after that is it going to think in terms of paying dividends. अगर वो मतलब the primary, let's say the focus of the company here is to ensure growth and to ensure that its reputation is maintained. तो जो उसको पैसे की जरूरत है, whether it is for working capital, whether it is for capital expenditure, all that it will meet from its profits. वो retain करेगा उतना. Whatever is left, it may be more, it may be less, that will go as dividend. This is another policy which is followed, but it is quite often seen as a acceptable policy. But the thing is कि इसमें उतार चढ़ाव बहुत होगा, amount of dividend. So this is one point here, and we now come to another factor. So there are no different ways of looking at it. What are the factors which will ultimately determine our dividend payout ratio? ये चीज आपको हम बताएंगे after a break of 5-6 minutes. Okay, और आप लोग पानी वानी पी लीजिए, हम भी पी लेते हैं, उसके बाद I'll come back and we'll go into this. I think that will be the last section of our presentation.
Okay. Okay.
Thank you. Thank you. Very well.
Yes, sir, we are back.
Yes, yes. Just joining. So, coming to the last section for today, what are the factors that influence the dividend payout ratio? The first thing, of course, is maintenance of the reserves. So, this we are getting more into loquacious area here. The various reserves or different purposes are needed for the efficient running of a company. You have reserve for depreciation, working capital, bad debts, dividend equalization, expansion, taxation, debenture redemption, reference share redemption are very common for a company to keep apart. The surplus is available for dividend. So one thing which the company will have to always take care of is in the bank, we used to refer to this as provisioning, creating provisions.
Yes, sir.
So if there is a need for something in the future, you will generally want to put away some part of your earning every year for that contingency. So, for example, bad debt provision is a very big part in banks.
Yes, sir.
So, most banks will want to keep a substantial amount of the total possible bad debts, those which are loss assets, those which are doubtful assets. Out of that, a very good part is kept as a reserve, basically for this. If tomorrow this goes bad, then my profit is not affected in a single day. It is adjusted over a period of time. So similarly, every different types of companies are going to have different requirements. Those who have basically raised uh, capital through debentures, they have borrowed by issuing debentures. Uh, as we were discussing, when the debenture period is over, if it is, let's say, a 7-year debenture, after 7 years, the debenture has to be repaid. Suddenly, the whole amount will have to be, the principal amount will have to be repaid to the debenture holders. So, if the company does not create a reserve, when that time comes when it has to be repaid, it is going to be a huge, huge issue. Similarly, for preference share redemption, so they have to keep these things apart. Taxation, obviously, this they will be doing in any case. Anything to add here, Lokesh? Something from your experience?
I think everything is covered, sir.
It's here, huh? Okay. Then we can take this existence of earned surplus. A company cannot pay dividends out of capital. So one condition is that they will have to have profit. If they have profit only, then can they go ahead and think about a dividend. So dividend is payable out of current profits or accumulated profits of a company. It can be paid after providing for depreciation as per Companies Act. So if the company is in loss, like today we were looking at that example of Tata Motors, and as you can see, they have not paid any dividend at all. Mainly because it doesn't make sense to pay dividends if you're in loss. Why would you want to further complicate your position? Then cash position is a big criterion to pay dividend. So for a company, cash is needed for various contingencies. They cannot be ignored for the survival of a company. So dividend policy has to be made after the serious consideration of the cash position of the company. Basically, when we speak about the cash position, what we are basically saying is that the company should have a certain amount of liquidity. And if there is reason for the company to believe that they are going to need cash, then they will have to make a provision for that before they decide to actually pay dividend. Then we have another factor here, which is the need for growth and expansion. This, of course, is what we have been discussing all along. So, a company quite likely is brought into being not to remain static. Basically, the idea is to grow and expand. And for this, cash flow must exist. Every available amount cannot be spent for payment as dividend to shareholders. That will restrict the scope for its growth and expansion. Many companies follow an orthodox dividend policy and provide for liberal plowing back of profits into the business. And these retained earnings are utilized for expansion and growth as a source of internal finance. So, one point which is very clear is that if I want to grow, then I have to have a substantial amount retained within my company. Look at Asian Paints, that example which we just saw. Asian Paints, people who have analyzed the company, met the board, ever since this company has come into existence, shortly after it came into existence, it has been giving very reliably, it has been giving 20-30% returns on equity. Now, this particular firm, even despite that, what you find is that it is always focused on future growth. So you look at that, 55% of that has been paid, 45% has been retained within the company. And look at the difference between this and let's say the other company which was there, Britannia, the FMCG company, which is not retaining anything. It is not retaining anything. It is comfortable at the level at which it exists today. So normally the thought is that companies which are comfortable at the point where they are right now and are not looking to expand, such companies are considered to be mature companies. So, they have reached a certain level. They are comfortable with the level of business that they have, the sort of margins that they have, and it is not easy for somebody else to enter the business and be a challenge for them. So they are not that, concerned about further growth. So why do you think, for example, in the case of a company like Britannia or Hindustan Lever, what is the barrier for entry? That means if a competitor wants to come in and grab this business, what is the main issue which they will face? For example, our Baba Ramdev was very interested in trying to get into this area, but ultimately he has not really made much of an impact on the returns of these companies. What do you think are their strengths? Because what we have just seen in the case of Britannia is that this is a company which is not interested in, let's say, plowing back its profits, retaining earnings with a view to, like expansion. It's quite happy where it is. It is just reinforcing whatever strengths it has. And the reinforcement of these strengths is not being done through money. There are some other things at play. Can you guess what these other things are? Anyone? What could be the strength of a company like Britannia or Hindustan Lever? These companies, why is it that this is, I gave this to you for Britannia, but you take any of these FMCG companies, you will find that they do not retain any amount of the profits. And they are all very comfortable and they are very steadily getting excellent returns. I can show you the amount of, when we finish this discussion, I'll actually show you the profit and loss statement of this company, which we spoke about, and you look at the fantastic returns that they have. What do you think is the reason for that? No guessing also? Nobody wants to guess.
Sir, in spite of competition, they have some set of customers.
They have some
separate set of customers, definitely will go for their product. I mean,
So
if we go into Reliance Mart, if a child or someone want to buy a biscuit, first they will likely to look for some Britannia company products. Afterwards, if they didn't find, next they will look for options.
so that is the brand value.
Yes, sir, brand value.
So what you're saying is one very big thing is they have brand value and they have customer loyalty.
Yes, yes, sir.
For example, you're very right about biscuits. For example, I like to have a particular type of biscuit called Britannia cream cracker.
Okay.
Cream cracker biscuits. They are tasteless biscuits, no sugar, no salt. So most of my friends always say that this is what we like to call hospital wala biscuit. So it's fit for a sick person. Aap kyun khate ho? But I like it, that biscuit. Now, that biscuit with that taste is only available from Britannia. So no matter what happens, I will be buying that biscuit. Another product for you take Colgate Palmolive. Same sort of excellent performance. And what is the reason? You see that toothpaste which they have. You have solid brand loyalty. Apart from this, there is one more factor, and the point I'm trying to stress is that this strength is not based on the amount of money they are spending. This is based on their long presence in the industry, and that is the distribution network that they have. So the distribution network is so good that you give them any product, they are able to make it available across India, even at the tehsil level, or even the village level in some cases. It is that good. So I am sitting here in Lavasa. Lavasa is not even a tehsil. It is smaller than that. But you look for products from these companies, it is there with the one or two shops that we have. They make sure that it is always available. And this is done through investing in people, investing, let's say, giving commissions and things like that. And of course, because anybody who, when a small village shopkeeper, he buys a Britannia product to sell, he knows that the brand of this product is so solid that people will buy. So these companies, for them, they are not so interested in expansion. They just want to make sure that their distribution networks are fine. The quality of the products which they are making today, those are okay. And they build up on that. So that is one interesting thing there. Then there is this, the government taxation policy. In these days, corporate taxation is a very important factor to take into consideration. Government levies huge amount of taxes on companies to augment its revenue needs. This means the management is put into difficulty in maintaining stable or high rate of dividend. So this has to be considered while formulating dividend policy. So you give a huge amount as dividends, another amount you're already paying, a lot of payout is happening because of tax. ऐसा ना हो कि सिचुएशन हो जाए जहां आप अपने कंपनी में के ग्रोथ के लिए इन्वेस्ट करने से चूक जाए. That is the basic idea behind this. And then you have another factor, the dividend restrictions by creditors. So quite often, when as a banker, I can tell you this, when you give credit to a big company, you want to, not a big company really, to the medium companies. Big companies, they dictate terms. But the medium-sized company, you want to, ensure that they follow a very conservative policy. And conservative policy for a banker means you try to retain within the company the profits that you have and use it to grow. The more it grows, the more revenues and profits that it has, the more secure the lender feels. So quite often the lender will have a condition in his agreement with the borrower, which will restrict the management from giving dividends. So that is also one of the reasons which can lead to less dividends. So the last one, of course, is fixed asset replacement provision. So we already mentioned this in a different way when we said that there will be depreciation provisions and things like that. So inflationary economy management has to give serious thought on replacement of fixed assets. It will require huge amount which must be provided to keep the company running. Hence, the company is compelled to provide for liberal depreciation. Depreciation on historical cost is absolutely inadequate during inflation. You take in today's world, another thing which is, let's say, very notable as far as replacement is concerned. So those companies which rely a lot on computers and software and all, there is so much of movement, so much of new products coming in, and coming in so fast that it becomes a little, they have to keep replacing these things or keep upgrading. For that, money is required. So even in the case of software, which is, so for example, you take a PNB, a large part of our costs in software was paid to Infosys for developing the transaction system for the bank. Now, Infosys will develop it once. Every time you want to go for a major change in that, they will charge again. So a huge amount of money has to be ready with you to ensure that you can continue to go back to your vendor and keep increasing, keep improving your system. Because ultimately, your performance depends on that system itself. So these are, I think this was the last one. Yes, this brings us to the end of this particular thing. I just want to show you one more slide related to the I'll just share these Excel sheets, and I want you people to see what the actual returns are for three companies. One is Britannia, one is Asian Paints, and one is Marico. So let me just. Okay, so these are the returns of Britannia Industries. You can see they are taken over the years March 18 to March 22. What I really want to show you is this. So return on capital employed, you can see it is, except for 1 year, March 20, that is the COVID year. If you leave this out, it is always above 42%. See, 44, 42, 48, 49. Return on net worth, that is you can think of the total shareholders' funds here, equity and reserves, is 66% in 22, 53% in 21, and close to 30% in these 2 years. And even in the COVID year, it is 35%. See, this particular thing, this is the interesting thing in these companies, that they have such a steady return on net worth, mainly because of the brand loyalty which their products have and the distribution network which they have. So this was one company. I'll show you another one. Can you see this also?
Yes, yes, sir.
I'll just expand it a little. So now we're looking at Asian Paints. And look at this. Return on capital employed, 36, 36, 37, 34, 32. So what I'm trying to tell you is that these are companies now which have very consistent returns here. Return on net worth, once again, it is in that almost 25% range all throughout, 23.48, almost 24 in March 22 also. And this company will still spend a lot of money on a lot of, look at the dividend retention ratio here. So dividend payout is 55, earning retention is 45. Previous year, it was 84. Before that, it was 35, 59, 47. So what you are seeing is that the nature of the industry is deciding what the dividend is actually. In the case of Britannia, if you look at this, you'll find that they are actually giving out more than their profits. So the earning retention is minus. It is that bad in these 2 years. And earlier years, of course, they have retained some amount here. And look at Marico. In the case of Marico, first of all, look at their return on capital employed. Here again, you can see it is 33, 33, 43, 43, 45. So they also have the benefit of brand loyalty. They also have a fairly good distribution chain. You can see the reflection here. Return on net worth also is fantastic. 23, 32, 35, 36, 38. And if you look at their dividend ratios here, you will see that they are very, very much concerned about this, growth. So in the last year, they have retained all the profits. It used to be very low in the previous year, only 16.99, even lower in the year previous to that, 20, COVID year. It was, let's say, mid about 50-50 types here in 19, 22 and 18, but this year it is 100. So the basic idea, I think, here is they must be having some thought in mind where they will be basically thinking in terms of some major expansion, some opportunity which is available to them. So this more or less brings me to the end of today's section on dividends. I think next time we will quickly wind up this particular unit and move to the last unit in the pure finance part, after which we'll be moving to financial planning and things like that. So maybe in about 3 weeks' time, we will have some sort of a test on this. Achha, meanwhile, next time, I'll try to organize an online quiz for you. You can also join the quiz. There is a nice site called Kahoot, K-A-H-O-O-T. It does not require any subscription or anything. I can make the quiz on that. You can log in. I'll give you the unique ID of the quiz, and we can have a small quiz. It will be a little fun activity. Sometimes these classes can be a little boring, but for the only condition is that you will have to prepare a little. So you'll have to get
on up-to-date syllabus, sir.
No, I'll tell you which unit. आप एक select कर लो कौन सा unit आप करोगे. I'll make some questions from that, or let's say from 2 units, or we can have a small quiz. Now, this quiz is not with the intention of evaluating. It is more, the intention is to keep your interest in those parts of the course which we have finished, because we are today completing 1 month in the course. We began on 11th June, today is 10th of July. So maybe next week, Saturday, so you people are often busy. On Sunday, we'll try to have that quiz. Okay. Okay. So I think we can end here today unless you have any questions or anything on any or you want to add anything here, any of you?
No, sir.
That's it. Okay then.
No, sir.
Good night, sir.
Great. Okay. Good night.
Good night, sir.
Thank you, Hardik. Thank you, Lokesh.